And Netflix doesn't need a whole lot of introduction. I think probably most people that are tuning into the stream are probably Netflix customers. I've been a Netflix customer for a long time, and I'm quite happy with the service. So it looks like an after hours trading, the market likes what they heard out of that announcement. It is up almost 5%. This is a big cap stock with a valuation nearing $300 billion for this streaming company that was one of the original streamers of movie content and entertainment content. So I'll take a look at Netflix in detail. Before I jump in there, just wanted to check out the main indexes. What is a surprise is that they ended so flat today. They were flying quite high, especially the NASDAQ was flying quite high this morning, probably mid-morning. It was doing quite well following the announcement from TSM that had really good earnings. And I'll revisit that earnings a little bit after Netflix. But that is interesting that even the S&P ended in negative territory just slightly. But that was a big turnaround. Netflix ended today down 2%, but now it's recovering that loss in the after hours because the earnings were perceived to be positive. Earnings have been out for about an hour. Let's take a look at where Netflix is and take a look at their financials. So the company announced their earnings. In general, it was positive news. I'm so impressed with the fact that they're able to grow their user counts substantially and grow their revenues. So they can grow both members of their streaming service as well as prices. So they have a quite strong following. Yours truly, again, I've been a customer for a long time and have been giving them my monthly dues for a long time. I don't know that I'm going to end my subscription of Netflix. And the other subscription I have is to YouTube. I love YouTube. Those are my two go-tos. And Amazon provides their Prime members access to their video streaming. So those are the big three in my household. Back to Netflix, they grew in the current quarter, they grew by 15%, which is very impressive. And their operating income is there. Earnings per share were really solid. And they're guiding for the Q4 for it to be really good. In Q4, they're expecting growth to be 14.7, very good growth. Operating income to be nice and healthy. Margins are going to drop a little bit in Q4. I don't know if that's going to be a big worry for anybody. It is substantial though. It is dropping like 8 full percentage points down. The free cash flow is rebounding. You could see that in the prior quarter, the free cash flow was not as good as it could have been. Free cash flow had dropped like $1 billion, but now it's come back to above $2 billion. So I'll update that on my model and show you where I'm at with that valuation. And they've been buying back shares. Good job. They produce good free cash and they're buying back shares. I'm going to look at just do a flyby on their financials. This is tiny. It's very hard to see. But what I did is I took their balance sheet items and I put them into my valuation model as well as their cash flow. And what's good about Netflix is they provide plenty of information for investors to look at their company and evaluate how they did. I appreciate that. That's very cool that they do that. So I updated all the information that I needed. I'm looking at a free cash flow forecast that is basically, I'm taking their year-to-date free cash flow and annualizing that number by taking the free cash flow for the first 3 quarters, dividing by 3, and then multiplying times 4. And then trying to do a forecast based on a 10% growth rate. That might be a little bit conservative, and then having a healthy growth in the terminal value. So this is all the cash flows I expect the company is going to produce in the future, which is substantial. The discount rate, I moved to 7.5 since interest rates are dropping. I moved it from 8% to 7.5, which gets me to an intrinsic value of all those cash flows of $316 billion. Cash increased a little bit. Very good. Debt also increased a bit. So I add cash, take away debt, and I get to an equity value of $309.6 billion. And the market cap's 295. So there's a slight discount. If you look at the cash flows, they're going to produce discounted at 7.5%. There's about a little discount of 5%. And if we look at earnings per share, it's supposed to be a healthy number in 2025. I'm using 2025 numbers. And I'm going to use a PE of 24, grow it by 15%, which is pretty much at their sales growth rate. And that gets me to a valuation that shows that the stock's actually at a premium of 6%. So in general, it's a fairly priced stock. Netflix is fairly priced. It's a good company, really good company to have. And I've owned Netflix. I've owned it as recently as 2024. I've done well with Netflix. It is a winning stock for me, but I'm currently not a stockholder. I just think that it's a good company, but I'd rather hold Google Alphabet, which has YouTube. And YouTube is the biggest streaming platform in the market. It has more users and than Netflix. And is growing much faster. So I think YouTube will continue to be just a powerful player in that space. And I decided to sell my shares of Netflix at a good profit and really focus my investment into Google Alphabet. But that is Netflix. They announced today they were up about 5%, and we'll see where they go. Actually, become a paid member of the community. You can get really nice perks. Specifically, we're going to have our first workshop meeting this Saturday where we're going to get together, and it's going to be on a Google Meets call so we can talk through a valuation, talk through analyzing financials, and getting into valuations of companies in order to analyze companies that we are interested in. That's an example of one of the perks, as well as the investor call on Sundays that you would be invited to. So take a look. It'd be great to have you as a member, and there's details on the stream description that you can take a look at. So with that,